The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, this is Darrell Martin here with the Diagnostic Trading Hour, and I hope you are having a great day because the market is having a great day, depending upon how you want to look at it. It is getting creamed. So right now, let's go ahead and do our first thing, which is our market update on where everything is sitting at right now. And looking over it, we got the S&P down 20 points. We have the NASDAQ down 9.5. We have the Russell down 8.4, and the Dow is down 228 points on the day. Heading down basically as soon as the European session opened up with that Spanish downgrade, and continuing on with disappointing earnings results coming on in on the Dow. And then looking over at our metals, we got copper down 1.4%, silver down 1.29%, and gold is almost down 1%, right now down 16.5 points. Looking over at our agricultural market, we got the eggs, we got the corn down $6.75, and soybeans down $3.25. Seems like when the indexes are moving, the ags aren't. When the ags are, the indexes aren't. So everybody's putting their focus right now on these big index moves. Looking on over at our energy sector, oil is down $2.60. That's nearly a 3% drop in oil. And natural gas is flipping it around. It is up 2.71% right now. And if we focus on over looking at our currencies, we got the euro dollar down 82 pips, the pound dollar down 72, the Aussie dollar down 60. The US yen is actually down 11 pips, along with the US franc up 59 pips, and the U.S. Canadian up 8. So across the board, except against the yen right there, we're seeing the dollar showing continued strength as people try to fly to what they perceive to be safety in the U.S. bond markets. And there's so much going on right now with the markets. Not only do we have these disappointing earnings results, we got the Spanish downgrade. Not a big surprise with the lack of any kind of real plan coming out of Europe on what they're going to do, but also just with, everything that's happening. And we're seeing across the board with the elections, with being completely uncertain in a dead heat, and interesting election debate last night. So winner, who knows? I think it's sort of a toss up. They both got a couple jabs. Romney went more for the likable than the distinction last night, and focusing on the economy. And, Obama basically tried to paint Romney as not knowing what he's doing and being reckless. So, but not giving a whole lot of specifics, and Romney not really, I think, perturbed Obama a little bit because he really didn't fight back a whole lot. He just moved on and focused. And anyway, so it'll be interesting to see how that comes out. And right now, probably even more important, the presidential election, obviously incredibly important, but it's just Congress with the gridlock. So, what if Obama does get reelected and you have another 4 years of or at least 2 of gridlock in Congress? And that obviously is going to be a huge problem. So, what if Romney gets elected and there's gridlock and the Senate won't move? So, he at least does have a history of working across the aisle. And Obama has definitely a history of having a gridlocked Congress. So, whether or not, whatever you want to attribute that to, the times, whatever. But either way, there's definitely going to be some challenges, and the economic outlook not looking great unless there is a unified party on one side or the other. And I'm sure if you listen to the show, you know what side I'm on. But, hey, that's a great thing about America. Pick your side and go vote. No matter what side you take a side. And looking at, other things as well, we got the, fiscal cliff coming up with the massive cuts, scheduled into play. And the Democrats basically playing chicken. The Republicans saying, hey, we'll pass it, we'll extend it, we'll make sure everybody gets it. And then we can come back and we can revisit after the elections. The Democrats saying, hey, we're not giving it to the rich. And, I'm sorry, but there's just a reality here. You can tax them all you want, and it's not enough money to solve any of the problems. So, trying to act like that's a part of the solution, it's not even a piece of the solution, okay? They can raise those taxes a tremendous amount, and you're talking about a week or 2 of government spending. You're not talking about having any kind of impact on the national debt. So please stop using the argument that means nothing in reality. But, I'm not saying anti-Democrat. I'm just saying that argument, party or not, is not valid for fixing the economy. And, also what's not valid is QE that pumps money into mortgage-backed securities that goes in, at best into the market, but not into the money supply and doesn't help things out. And, of course, with those tax cuts coming in, the Bush tax cuts expiring, we need to extend those and get those going. And, obviously, I don't know why Democrats seem to think, and I'm not saying all Democrats, but I'm saying right now, at least what do they say, Obama right now, whatever, however you want to go there, why they think that, taking money from rich people will make the government more efficient. They haven't been efficient with racking up $4 trillion in debt. I don't think whether they take it from debt or whether they take it from the rich is going to make any difference on how effective they are. So the reality is they just got to figure out how to cut their expenses and increase their income. And the only way to increase the income when it's tax-based is to get money moving, money supply. Not QE, but money supply. It means you need to spur rich people to have more money, to spend that money, to have reasons to spend that money so it gets all over the place. And I don't mean rich like billionaires, okay? I'm, just the average entrepreneur where things aren't in their way. And you need to get healthcare gridlock out of the way. I can't even get insurance for my child as an individual right now. I have to go through a group policy plan to make that happen. It's impossible. That doesn't help small business owners get out there and start their company. If you think about literally, like if they're 0 to 3 months old, right now it's impossible to get health care unless you're poor on Medicare or you're on a group plan. You can't get an individual policy. My daughter has a policy for like $120 a month. My son, you can't get one because they said, hey, if we can't have any caps and we can't deny anybody, then we just won't accept anybody. And so there literally is not a single insurance policy I can get for my brand new baby boy. Fortunately, through my wife's group plan, we're able to take advantage of that. But, it wasn't our goal to do that. We wanted to just get him on an individual policy and, get away from the whole group employee scene whatsoever. But that's where we're at right now. And so, that uncertainty is not helping things. So there's a lot stacked up against the market right now. And, hopefully we will see a brighter next 4 years. And I don't really care who does it. I just hope somebody does. Anyway, so moving on forward and checking things out. That's where we're at on the markets right now. And we talked a little bit already about the fundamentals and what's happening in the market. And what I'll go ahead and do also, as I like to do right now, what I've been doing lately is posting the diagnostic deviation levels up there for you to see. So that way you can check out what's going on in the markets. And so I'll put those right there. If you're on Tiger TV or if you're over in the Tiger's Den, then you can check those out right now. And in addition, I want to go ahead and look at the fundamentals. While those are posted, you can check them out, like I said. But today, what is happening? Well, we got Tuesday. We didn't really have a lot of, U.S. news, obviously, come out, except for we had the earnings announcement. So that's huge enough, obviously, in itself. But also looking over, let's see, Britain here had its BBA mortgage approval rates. Those came in a little higher than expected, but that's not a big moving thing. Canada did have its core retail sales, and that came in at 0.4%, which is great for the Canadian dollar. Overall, though, there's so many problems going on that it just gave the dollar a lot of strength. But we can check that out, and you can see that the Canadian dollar did gain an insane amount of strength on that, but the U.S. dollar regained ground after the poor earnings results were pouring in. But you see right there, it's a dramatic drop. We talked about that yesterday. Be ready for that. Also, the Bank of Canada rate statement, overnight rate announcements coming out all at 7:30, and that was a big move. That was your straddle play, by the way. So if you did a straddle, I got an email from one of the users who he did a straddle on the U.S. Canadian last night. Did great on it. And so shout out to Mark there. Good job on the straddle play. And but he went in and basically just did a straddle on the U.S. Canadian before the news announcement, and had a nice, good, profitable trade. And so that's one of the great things about trading, whether you're trading binaries or spreads over on Nadex, is you can go in and you can trade these crazy moves, but have completely defined risk in the process. And you don't have to worry about getting stopped out of the trade. If you don't already have a Nadex account, hop on over to TFNN.com. Again, that's TFNN.com, and click on Nadex. Once you click on Nadex, you'll be taken over to their website, and you can click on Create an Account, and you can go from start to funded in basically in about 5 minutes. And it's only $100 to fund an account. I recommend you put $500, $1,000, really $2,000 in the account. I think is a great balance to have in there. You can start with just $100. You can really place trades with just $100 in the account. You can place $5, $10, $20, $50 trades. Okay. But obviously, if you put $100 in and you place a few trades and you lose it, you're going to, this doesn't work, and you're going to quit. So you need to have a little bit of money in there where you can have some good trades, some bad trades, And but at the same time, you want to trade safe, trade smart, and trade like you'd normally trade. Don't just throw money, into the wind. And also look over here, and you'll see under products there's a demo account link. You can click on that, and now you can trade. They'll give you $25,000 of funny money, give you a couple weeks to try that out, fund an account, and you can get that extended. Just if you want to email me to ask me how, you can definitely do that. And but put in your username, your first name, last name, email address, and phone number. Hit apply for demo, and you'll get a login in about a few seconds. And with a password, and then you can log right in to your Nadex account, log into your live account here, and your demo account right here. And if you have any questions, of course, please give me a call. I'll be happy to help you out, answer any questions you got, 877-927-6648. So going on back over and looking at some of the things we were just talking about here, and I'll go ahead and repost those diagnostic deviation levels as we go over the fundamentals. And so like I said, we had the Bank of Canada rate statement, the overnight rate, and the core retail sales all came out. And you can get the statistics. Let's see here. I'll give you the latest news release link there. You can go over to statcan.gc.ca, and you can grab that for the latest stats from the Bank of Canada for the retail. And if you go on over to Bank of Canada rate statement, you can get the latest release on the Bank of Canada's website, which is bankofcanada.ca. And those are just great resources for whenever those news announcements come out, so you can see what's happening. Now, in addition to that, we also have a couple other things going on today. So we're going to have the Bank of England, the Governor King, not the King, but his last name is King. It's Mervyn King. He's the Bank of England governor. He's going to come out, and he's actually going to do a little speech today at 2 o'clock at the South Wales Chamber of Commerce. So, that could have a pretty decent impact, being the head of the central bank, and he has a lot of influence. So just be aware of that. It could have a pound-dollar impact, again, at 2 o'clock Central Time, 3 o'clock Eastern Time today. Going into tonight, you're going to have a little bit of an Aussie play going on at 7:30. And by the way, if you do need the Bank of England's website there, bankofengland.co.uk, and you can get reports. I'm sure there's multiple ways to find out details about that as it comes out. Of course, we'll be talking about it right here. But you can go right on there, and you can get their latest publications and their latest news. Like right here where it says news releases. And so that's just a helpful website for you whenever you're looking up information from the Bank of England. And going on over and checking out the CPI that's coming out from the Aussie dollar tonight at 7:30. That'll come on their their Bureau of Labor Statistics website. And so you can get that right here at abs.gov.au. And that's abs.gov.au, where you can get access to the figures as they're posted. And that'll basically be the major announcements that we're going to have tonight, except for there'll be one more coming out of China, but the time is going to be around 8:45, and it's just going to be the flash manufacturing PMI, which is a pretty important number for China, so that will impact the markets overnight, again at 8:45 tonight Central Time. All right, stay out there. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I am giving you an update right now just on the markets and where everything is at. We're going over China. And one of the websites you can go to for China for press releases, it can be a little bit hard to find that, is Market with an I. Okay, M-A-R-K-I-T, economics.com. And click on press releases. And you'll see a lot of press releases coming out of different countries like Russia, the Czech Republic, Poland, Indonesia, China. So some of those reports that are a little bit harder to find, this is a great place to go to find basically just reports in different countries that aren't necessarily as easily available in other places. And that's M-A-R-K-I-T, economics.com. And so you may want to take advantage of that. And then looking on over again, that's going to be for the HSBC Flash Manufacturing PMI. And for China, that basically is the survey of the purchasing managers in the industry. They interview 430 purchasing managers and ask them to rate business conditions on employment, production, orders, prices, deliveries, inventories, etc. And sometimes this is also called the HSBC, can also, of course, be called the Hong Kong and Shanghai Banking Corporation. That's HSBC, if you never know what that stood for. And that's Hong Kong and Shanghai Banking Corporation. And what is PMI? It's Purchasing Managers Index. So that's why they interview purchasing managers with questions, and they rate it to get an index number. So the combined numbers, just like you think an index of the S&P 500 is a review of the 500 stocks in the S&P, And when they put all those numbers together in their little formula and spit it out, you get the S&P index. So Purchasing Managers Index. Whenever you hear PMI, that's what you know what it stands for. And when we go on over and we look at what's coming up tomorrow, we're going to have a lot of PMIs coming out. Okay, so not only do we have the China PMI coming out at 8:45 Central, 9:45 Eastern, we also got the French flash manufacturing PMI coming out at 2 a.m. tomorrow, and that's going to be followed up by the German flash at 2:30 a.m. tomorrow, and then it's going to be followed up by 3 a.m. by the German business climate report at 3 a.m. tomorrow. I mean, it's just coming and coming and coming. And then the Euro flash manufacturing PMI is going to come out at 3 a.m. tomorrow. And then Germany's going to have a 10-year bond auction. Not expected to have a problem there. And then we're rolling over to 6:45 p.m. And we're going to have the ECB President Draghi. He is going to have a speech. And he's going to come back and have another speech at 9 a.m. So it is going to be a Euro day tomorrow with all these manufacturing reports coming out. And manufacturing has not looked that great across the board in Europe. So this could be a further drain on the euro dollar, and we've definitely seen some hits on the euro dollar lately. And if we just go ahead and look at the chart right now, and you can see it actually dipped and has stayed below for the day so far, below that 1.3 level. And with all these manufacturing PMI reports coming out, it could easily continue a very strong decline, adding in the Spanish bond issue or the Spanish downgrade issues, which of course should not help the upcoming Spanish bond, auction that's coming out soon. And so when that comes out, that of course is not going to be helpful to the Spanish bond markets having a downgrade in their basically all their debt. So that ought to see that rise up, and then now it's going to be like, well, what are they going to do to fix that one? Because they just had all these European meetings, and they didn't really come up with any true solutions. And then, of course, on Wednesday, we got new home sales here in the U.S. We got crude oil inventories, and Bank of Canada is going to talk about their statement. And then we got the FOMC statement right here in the United States. So, along with the federal funds rate, New Zealand will also have their rate statement coming out later in the day at 3 o'clock Central. So there's going to be a lot happening in the next basically 24 hours. So if you thought this day was busy, we're going to see a very, very busy day tomorrow, along with continued earnings results on top of everything else. And yes, everything I just said was for tomorrow. So pretty crazy day right there coming up. And anyway, so let's go ahead and check out where the markets are on the deviations and see what we can do to take advantage of them and stay ahead of the markets. And again, deviation levels are very helpful, and I go over them, and we're going to be uploading these very soon on over to TFNN as well, so for you to get access to them right there. And so if we go in and we just start scrolling through the markets to seeing where they're at on their deviations, we had a -1 deviation, basically at a 14.01, and we dropped to 14.02, so which is basically great. So what you want to do is you're always, of course, tightening stops. Now, if you got in this morning, you're not expecting too much more of a move, but I mean, you still had plenty of move left, even after the move up and move down right there. You had plenty of move left. And this isn't necessarily a high gap fill probability play, by the way, for you gap fill traders out there. This is not a high probability gap fill play. Just where it closed at. It closed below the previous day's low. That's not a good sign on gap fill plays. We'll come on back from here, and we'll go through, and we'll start looking at the deviations, check out where the markets are, and what to do next. Stay right there. We'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour, and we're going to go ahead and go over the deviation levels, check out the markets, and see how they've responded. So we got the S&P down to 1402. So basically, if you're in the market, you were shorting right here, you would have tightened your stops right about, let's see here, right around 1415. And then you can see that's pretty much right where it was tightening up and starting to bounce a little bit. And then you tighten it again around 1410. And it came on down here to 1410, bounced a little bit. And then you're ready to take some profits really close to 1401. It hit 1402 and has turned around a little bit so far for the day. And but it has been rising on weaker and weaker volume. And I'm going to go ahead and I'm going to throw this on over to my 10-minute charts. If I am looking at minutes instead of Renkos, and I like to be looking at 10-minute bars. And so just checking that out right there. And then we go on over and we can check out what's going on. Again, this is not the highest probability gap-filled day. Could be a gap-filled day, but it's not a high probability. I mean, it does not happen like 75, 80% of the time. Whereas certain gap fill plays do happen that often. And looking over at the Russell, we had an expectation of a move down to 803.06.1, whatever, how you want to round that off. But 803, so we had 803.7 right down to the deviation level. So we're within 1 point. Same on the S&P. So did a great job helping you take profits on that at the 0.5 and 0.7 level, tightening your stops, and then looking to take profits right when it's getting right around that 1 at deviation move. And then looking over at the NASDAQ. NASDAQ is showing some decent strength. But again, it is not the highest probability. It was just a little shy of actually being a high probability deviation move, a gap fill move. But it moved on down to 26.51, and we did have a expectation down to 26.26. And so it moved lower than that, did not move on down to the next level of 25.63. But let's see here. We had the expectation again down to 26.26. And so we can see that right there, 26. And, need a little bit more of a move to fulfill that. About 30 more points there on it, the NASDAQ. And it's only moved down to 26.51, which really, that's just past the half deviation. So the NASDAQ's actually had some of the lightest movement of the day across the board as far as deviation expectation. Let's go ahead and check out the Dow. Now, we know the Dow has got hammered all night and into the morning and hasn't had the strongest recovery. And right now it's at 13.021, and that is definitely past the one deviation, so it did break its full deviation move like the other two, S&P and Russell did. And 13.040 actually was the deviation marker. So this is your take profit, definitely tighten your stop zone. And you would have been glad you did, because you did it right near the bottom. So that would have worked out really, really well for you. And this could be, either where we see a further move down or bounce back up, or we may just see it go flat for the day. Again, like we said, we do have a couple more things coming out today that could impact the markets. But the Dow has just had a lot of pressure put on it today. Looking on over at our copper, we got copper down to 3.548. And if we go on and look at the copper futures themselves, the expectation was for a move down to 3.519 for a full deviation of 3.550 for 0.7. And it actually broke the 0.7 by just 2 ticks. So very, very close, right on the money. And that's where you would have tightened stops. You would have been happy it did, because it started pulling right back right after that. And then looking over at gold, on the gold futures, then what we can see here is it moved on down to 1705.1. And on 1705.1 right there, what are we going to see move down to? Well, 1710 would have been the 0.7. And it's been pretty choppy. So, it flew down, of course, this morning. But it's just been moving up and down, up and down. And we were expecting a move, like I said, down to at least 1710 for the 0.7. And that's pretty much where it's been, just oscillating around that a few points all day. And then ideally it moved down to 1701, basically 1702, I guess, if you round it off. And haven't quite hit that level yet, and it just looks like it's flatlined at the moment. But I think there's definitely room for some continued downside movement right there in gold. And then hopping on over to silver. So I know we had a caller in yesterday who was talking about puts on silver, so I bet he's happy right now. It's continued its decline. And the expectation on silver was for a move down to 31.72 and then further down to 31.40. It did break the 31.72. That's where you tighten your stops at. And then, of course, didn't quite hit the 31.40. Would have got stopped out if you were trading that early this morning. If not, the move basically happened. It went flat, and there really wasn't anything to do during the open pit hour trading session on silver. It was really a European trading session overall. Now, natural gas, after its massive move down, has decided to move massively on back up. And natural gas there, we're seeing it up today, 3.59. Looks like 3.59. And to get the exact high on that, 3.559. All right. So move on up to 3.559 on natural gas. And so, it's just had such a huge move down and then move back up, retracing on that. And so pretty, shocked just at the massive moves that we've seen in natural gas overall as a whole. And but if you go on and you look at the December contract, which is really probably the contract you want to start looking at this point, then let's go ahead and zone in on that one. And December contract, we're looking at a high of 3.876. And so the expectation on natural gas was for a move on the December contract on to 3.893. So really there was a lot of volatility built into the option, so it may not be done yet. It did hit the half deviation mark of 3.857 already, and it just recently hit that mark right here. And so as we saw that, you tighten stops up, and it looks like it might be trying to do a pullback, but it is pulling back, as you can see, after that recent breakout on volume, which is doing great. Every time it's having these little breakouts, boom, volume. It's doing a pullback, so it may be ready for another little pop right there on natural gas. And going on over and looking at crude oil. Crude oil right now made a low down to 85.69. And so on crude oil, checking out 85.69, that is very close to a one deviation move. It literally is just a matter of a few ticks off. Looks like 85.59 or 86.59 was our 0.7. So that would have been right up about here, and it moved so much overnight already. but 86.5 now. So you'd be tightening stops right at this point and waiting for ideally it to hit 80. Let's see, I said 85.50. And it came out at 85.69. So we got about 19 ticks away off that. You might have been stopped out already on your short side. But we basically have seen, again, a lot of flat, not much happening at all since really 9:30, 10:30 Eastern time there. And then going on over and checking out our ags. On the ag contract, what we can see for our corn is corn did move on down, had a big move down along with everything else. Just everything moved down overnight, down to 749. Let's see here to get the exact number for you, 749.5. And we did have an expectation for it to move to 749.25 on the half deviation. So that would be a tighten stop move, and then it didn't move it on down to the 0.7 or 1. And so if you had your stops tightened at that point, you probably would have got stopped out right about here and pulled back up. And I don't expect just a whole lot of continued move on corn for the day. And that ought to be shutting down. That market will be closing down here pretty soon. Looking on it's the pit market. And then looking at soybeans, after a big move down, they've done a big move up. They have done a gap fill today. And, they were a decent gap fill probability play. But checking that out on the soybean market and looking at the soybean futures, the expectation on the overnight down move was down to, let's see, right now, let's go ahead and look at the low. The low was 15.29, and we expected soybeans to move down to about, let's see, 15.26, at least on a half. It didn't even hit a half deviation move down. So really quiet over in ag land. We talked about that a little bit at the beginning. Big move on index, small moves on ags today. And hopping on over and checking out some of our currency pairs. So over on the Aussie dollar, and we zone in on the Aussie and look at just where it's moved, and it just had some, the dollar's gaining a lot of strength against the Aussie overnight. And looks like we had to move on down to 1.0235. And that would have been a little bit past our 0.7 deviation level of 1.0242. So good news is you would have tightened stops. It's starting to do a pullback right there. And we'll see if that continues or not. But also one of the things is it's always good. I don't care if you're a Forex trader. You need to be looking at futures Forex also. Why? So you can check out the volume. Okay, so you can see what's going on the volume, and notice how we're getting a big move down, but we're getting declining volume. So that gives you another clue that it is lightening up. So if you're using something like MetaTrader 4 for your Forex, it may be time to upgrade to another platform like a NinjaTrader or Thinkorswim or whatever to find a platform that is going to be able to help you look at the volume on the futures market. And if you need help on that, you want to know where to get the hookup, just let me know. I can tell you where all the great deals are for the platforms and how to get free data fees and things like that. And just send me an email, I'll help you out. Look on over to euro dollar. On euro dollar, let's see here, the low is 1.2957, and looking at that, move on down to 1.2958. Actually, was the 0.7 deviation move. So basically, it said tighten stops right here, and of course that's looking at the futures. Let's go ahead and tighten in on the spot, and on the spot we had to move down to 1.2951. So either way, at this point right here, you've been tightening your stops up, and you can see everything sort of leveled off at that point. And looking on over to pound dollar. On the pound dollar, what we got going on? All right, what we have going on right here is it moved on down to 1.5912, and on the pound dollar we were expecting a move down to 1.5917. So on the 0.7, again, the first point where you're you want to tighten them at halves, but you definitely have to tighten them at 0.7s. It hit the 0.7. You're seeing the pullback, and you can monitor that. And again, looking over at the futures. And you can see, what's been going on in the volume. We saw a ton of volume out of the gate. And, it's a decent amount of volume on the push through there. The push through there. Did not see any real strength on the push through on volume on that. And you can see it's just trended right back up ever since. So that volume really does help. Notice this last push, this last low, really weak volume compared to the previous push throughs that we've seen this morning. So that really does help you, give you a clue, along with the deviations. And looking on down over at the USD franc. USD franc showing a lot of strength and moving on up and then going flat. But on our high today, we have a high up to 0.9342. And the USD franc moving up to 0.9342. The 0.9334 was 0.7. And I didn't quite make it all the way to 1, which would have been 0.9361. And but you would have tightened your stops when it hit that level right there. So we're doing pretty good right there on corn as well. 0.9334 again would have been tightening the stops up as soon as it hit it right around here, and you can see it just went flatlined after that. So not a bad place to take profit at all. And then checking out the U.S. Canadian. On the U.S. Canadian, we had that massive, massive drop happen overnight. And where did it shoot up to? It shot on up to 0.9975. And there was actually a half deviation move was 0.9971 is where it climbed up to overnight. So it actually climbed up to a half deviation. It was sitting at a half deviation mark right there at the news announcement. From that point, it then plummeted on down pretty fast to 0.99, basically 00 looks like. So nice round number on the low side. And so on U.S. Canadian, 0.9900 would have been basically a full half deviation move and then a little bit more on it back down. So half deviation move up, and it dropped a half deviation right after the news announcement. And so that would have been a good take profit point, knowing that you're at a half deviation and it moves to 0. That makes a very good, binary strike choice, like half a deviation up, half a deviation down, right before news. And hopping on over and looking at the USD yen. On the US yen, we can go in and we can check out what it's been doing. And it's basically been it's been moving down, but just check out this tough pattern. So trying to trade this on Forex is not going to be you're going to get stopped out. All right. If you go over there and you trade it on Nadex, you don't have to worry about getting stopped out because you can't get stopped out. You can trade the spreads, you can trade them during the night, you can trade them in the morning, whatever. But you could have traded this without this worry of these crazy spikes that have been going on the entire time. And anyways, on the U.S. yen, we had to move on down to, looks like our low so far for the day since yesterday's trading day there is 79.70. And that's a little below, let's see, 79.70. Really, it's not even moving a half deviation move up or down. So this would have been just a hard day to trade. And not that the moves were massive. This is a pretty tight range. This is only like 30 ticks here. But, it definitely would have been very, very difficult. Would have chopped you around a lot. And, could have easily cost you some money. And this is looking at 10-minute bars. So that's a tough thing to trade right there. Now, you get a day like this, it's a lot easier because the thing's moving. But when it does this, that can just mess you up. And so it's sort of nice when you have the spreads on. You can trade like you're trading the underlying market and not have to worry about getting stopped out every 5 seconds on the trade. So definitely recommend you check out the Nadex spreads on there. And if you haven't checked them out, I already talked about how to get on there and how to get an account. But let me show you, just looking inside the actual platform itself, how they work. Okay? So I'm going to log in right now, and I'll show you how the USD yen, just for kicks, okay? I'll show you how they work. We're not really going to make a trade because I don't see a trade, but I do want to show you, how would you trade it, okay? And like I said, you could have done the US Canadian as well. That was a great straddle play earlier today. And so hopping on over, you log in, and you go over here to Forex, and then you go to either bull spreads or binaries. So let's say we go to the bull spreads, because they're a lot more at trading the underlying. Then you go down to US yen, and you have different times you can trade. So let's say you're doing the 7 to 3 o'clock. Well, now you can go in here and you can go, okay, well, by the way, if you click on any of the Forex pairs, if you click on it, this is a nice thing about, they can't do it on the other futures markets because that's a different exchange, but since Forex is not exchange-based, then you can go in here and you can actually look at the underlying indicative price, 79.83.5, actually tells you where it's at. And so we can figure out, what has the lowest risk. Well, if it's at 79.83, then I want the closest ceiling I can get. Well, 79.90 is a very close ceiling. So if I go in and I sell this one contract, I have a $9 risk on a $140 one reward. So that is not a bad trade at all if you're looking at going short over on the spreads, and you cannot get stopped out of the trade. And look at that, how close we are. We're only a couple ticks off of where the market is at. So we'll go ahead and cover that when you come right back from this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risks risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're just talking about how to do a U.S. yen trade. And so if you wanted to go in and you wanted to place a trade on the Nadex platform, say on the spreads, you can choose, by the way, the green buttons always will initiate an order, okay? But also you can click on bid or ask. It'll automatically open the sell ticket and fill in the price for you. So you put that on and we look at it, and we can see like the US yen right now is trading at 79.82, and I get in at 79.81. So I'm only one tick off there, okay? There's about an hour left till expiration on this trade. The market moves down at all, great. But it gives me a 9-tick stop loss, all right? But not a 9-tick stop trade, meaning let's say the market shoots up 15, 20 ticks, and then it moves back down. Well, I'm still in my trade, whereas the US yen trader is knocked out of his trade. And so I go in there, I can hit place order. Now my order's filled. I'm in the trade. I'm only risking $9 on the trade. Whereas this guy has at least $9 risk or more, depending upon exactly where he puts, his stop loss. I don't have to worry about a stop loss because my stop loss is automatically done by the ceiling, which is 79.90. I can't lose money above at 79.90 on this trade, no matter how high it goes, and I'm not out of the trade. I have until expiration for it to come back down and be right. Now, what if it expires right where I sold it here at 79.81? Well, I get my $9 back. Okay, it's not like a binary. It's not a all or nothing trade. Okay, what if it expires at 79.82 and I sold it at 79.81? Well, if I sell at 79.81 and I buy back at 79.82, what happens? I lose $1. Okay, so a $1 risk on the trade. And by the way, my margin on that trade, it was $9. Okay, so I wasn't going in and putting 50 to 1. I mean, this is a massive leverage. That's $10,000 basically dollars in control for a mere $9. And yeah, I know you got to go in, you got to do currency conversion of USD and all that other fun stuff. But if you're looking at euro dollar, pound dollar, Aussie dollar, that's exactly how it works. 1 unit, basically in all of them, it's 1 unit is a mini watt. Okay, and but you're going in right there and you're looking at it literally $9 margin, $9 risk. If it expires right where it's at, I get my $9 back. If it goes up, like if it stays, let's say the market stays right where it's at, say 982, pip higher than where I sold it, I lose $1. If it goes down a few bucks, I make a few bucks. Okay, pretty simple. And let's say I want to take profit on this trade. I risk 9. Let's just say, you know what? Hey, if this thing got back down to 79, say 70, that'd be awesome. I risked $9, and you know what? I made a little bit of money. I actually made $11. So I can go in here. I just hit the green button right next to it, and I click 79.70. I just changed my price. I sold, so now I got to buy back. And sort of simple. We always think about buying first, buying low, sell high. Well, if you sell first, you want to sell high, buy low. So lower than where you did it. And then just hit place order. And now what will happen is I'll actually see this at the bottom in my working orders. Okay? And I can do the same thing on the binaries. I can go in, and if I sell high, then I buy low. If I buy, I sell low. So there's different ways you can do it. But this trade right here now has a $9 risk. I basically have set a take profit for $11. So I'm looking for a little better than 1-to-1 risk-reward ratio on this trade. You could obviously go for a lot more than that. So the profit potential on the trade is, pretty high. It could be $141. I doubt the market, U.S. yen is going to be dropping 141 pips in the next hour. Strange things have happened, but, not really planning on that, not making that part of, my trading plan. But that's just really a quick example to show you how to put in a spread order, how they really do help you mirror the markets, and how you can put in a take profit order without having to worry about getting it stopped out. Let's go ahead and do a quick market wrap on where everything is here at the bottom of the hour. We got the S&P down 20 points, the NASDAQ down a little over 14.5. We got the Russell down 8.6 points, and the Dow down 226 points on the day. We got copper down 1.48% and silver down 1.35%. We got gold down $16 right now on the day, and we got corn down $7, and we got soybeans down $1.25. Looking over at oil, oil is down 2.67%, $2.37 on oil, and natural gas still up over 2%, with the euro dollar, pound dollar, Aussie dollar, US yen all in the red, US franc and US Canadian now in the positive, making the dollar across the board stronger against all the major currency pairs. Everybody have a great day, a safe day. Check out Nadex if you haven't yet, and I will talk to you tomorrow, 12 to 1 Central, 1 to 2 Eastern Time. Stay tuned. We have a great show coming right up.
Let me tell you something, folks. I have people